Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 20th, 2026, and we're diving into the latest earnings report from PTC Therapeutics. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. PTC Therapeutics has just released their fourth quarter and full year 2025 financial results, and there's a lot to unpack, especially with their recent product launches and financial performance.
Revenue and profitability overview. Let's start with the revenue figures. PTC Therapeutics reported total revenues of $164.7 million for the fourth quarter of 2025, which is a decrease from the same quarter last year. However, their full-year revenue has more than doubled to $1.73 billion. John, what are the key drivers behind this growth?
The significant increase in full-year revenue is primarily due to the collaboration and license revenue from their agreement with Novartis, which contributed nearly $1 billion. Additionally, their product and royalty revenues have shown strong performance, particularly with the launch of Sephience. Despite the quarterly dip, the overall financial health is robust, as evidenced by their net income of $682.6 million for the year and a strong cash position of $1.95 billion.
Product performance and strategic initiatives. PTC's new product, Sephience, seems to be a major highlight. Can you tell us more about its performance and strategic importance?
Absolutely. Sephience has had a strong start since its launch in the second half of 2025, generating $92 million in the fourth quarter alone and $111 million for the year. The product has been well received globally, with 946 patients on commercial therapy. Recent approvals in Japan and Brazil further expand its market reach, and PTC plans to increase its global footprint to 20 to 30 countries by the end of 2026. This strategic expansion is crucial for sustaining their revenue growth.
Research and development insights. Research and development are at the core of PTC's operations. How are they managing their R&D expenses, and what are the key developments in their pipeline?
PTC's R&D expenses for the fourth quarter were $133.1 million on a GAAP basis, but they managed to reduce this to $124.3 million on a non-GAAP basis by excluding stock-based compensation. They are making significant strides in their pipeline, with the FDA showing openness to an accelerated approval pathway for their Huntington's disease program. Additionally, they are working on the vatiquinone program for Friedreich's ataxia, although the FDA has requested an additional study for NDA resubmission.
Financial guidance and future outlook. Looking ahead, what guidance has PTC provided for 2026, and what should investors focus on?
PTC has provided a revenue guidance of $700 to $800 million for 2026, indicating a potential growth of 19% to 36% from 2025, with Sephience expected to be a major contributor. They also project R&D and SG&A expenses between $775 million and $815 million on a GAAP basis and $680 million to $720 million on a non-GAAP basis. Investors should keep an eye on Sephience's market expansion and the progress of their clinical trials, which are pivotal for their future growth.